You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday once again. That means it's time once again for the premier options educational program. Yes, it is time for Options Bootcamp. Getting a rare doubleheader taste out there, listeners. So all of our pro folks who are logging into the live now, you get a nice, fun treat this week. 2 episodes back to back in your ear holes because we like you folks and because Dan is traveling. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting Options Insider Radio Network. Reminding you, if you like what you hear, first off, you should be listening to the full network. So wherever you're getting this, make sure you're subscribed to the full network feed. You're going to get nearly a dozen shows coming at you. B, again, if you like what you hear, whatever your platform lets you do, a star, a like, a review, it all helps people discover the content. Just like this week, our 5-star review comes from Antilles. He says, highly recommend, all in caps. Well, thank you, Antilles. We highly recommend your review. We highly recommend everyone take the time to go out and do that. You're listening to this, you're already costing me some bandwidth. The least you could do. Throw some stars, some likes, whatever it is, a review our way. It helps pay back. Pay it forward, as the kids like to say out there. Of course, if you want even more in your lives, more content, more great pro Q&A sessions, options oddities to break down all the weird paper. We've been having some interesting trades and some home runs going on there on options oddities. Of course, live access to this and everything else we do. So if you want to be here for the doubleheader back-to-back, you don't want to wait a week to get the second episode. Only one place to go, theoptionsinsider.com/pro. You sign on for the pro, you get 200 plus hours of content coming at you the second you hit that button. More coming every week. And then, of course, you also get your name in the hat for great giveaways like our Pro Trading Crate. So awesome stuff, theoptionsinsider.com/pro. As we are now joined, as usual, by the black-hatted one himself, Mr. Dan P. from Market Taker Mentoring, what the cool kids call to Mr. P., welcome back to the show, sir.
Mark, it's always good to be back, and I can't wait to talk about the things we got to talk about.
Well, this week we got to talk about a lot, including a little bit of strike selection, so let's get to it, a little bit of the old options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to Options Drills. The portion of the show where we tell you how we utilize some technique or concept in the options market, go a little bit more detail, a little bit more granular, go a little bit behind the curtain, if you will, and give you some tips and tricks out there. Today, we're talking about a very important topic, strike selection. You know, Dan and I, in our multi-hour wargaming session, just for this show, that's how much effort we put into this show. We plan and we storyboard and we script it out for hours ahead of time. And during that session, I asked Dan, I said, Dan, what do you feel like in this mega doubleheader that you requested? What do you really feel like discussing? What is boiling over there at MTM that the folks just can't get enough of? And Dan instantly, without hesitation, said, strike selection. So, Mr. Dan, this is one of those topics that's kind of an oldie but a goodie, because you think about it, at the end of the day, this is kind of where the rubber meets the road in options trading. If you choose the wrong strike, you're kind of out of luck. So it's a good point to revisit. And we haven't talked about it specifically in quite some time on the show, probably going back many years. So first off, Mr. P, let's start there. What is it about strike selection made you want to get to it right now?
Well, it's funny, Mark. I mean, we teach a number of different strategies, from short squeezes to credit spreads, and they're all very contingent on precisely how you set up the trade. And like two people can look at the same chart, have the same opinion, but one could choose one strike price, another could choose the other, and one's going to make more money than the other. And so, and in some cases, one person could make money, one person could lose money just because of what strike you select. So it's a pretty under talked about sort of thing, I think. And I find that people can really benefit from a good, solid knowledge of what strike is optimal in which situation.
Let me just set the groundwork here, listeners. We're going to split this up into two segments. The first today is going to be really about straight up outright strike selection. You get into spreads, things get a little bit wonkier. We'll get into that on episode 2 of our doubleheader, which for our pro folks will be instantaneous after this one. For the rest of you, it'll be coming up next week. But Mr. Dan, let's get into it. This is a contentious topic. People have a lot of different ways that they go about choosing their strike. Maybe they look and say, I want to go a certain percentage out of the money. Maybe I'm a little bit more hardcore, and maybe I want to go by a certain delta. Maybe I go by what my tarot cards told me this morning. Mr. Dan, how do you go about at MTM choosing your strikes? Let's just start with basic outrights and go from there, sir.
Well, it's mainly moon cycles and horoscope.
That's another one. I also heard tea leaves are good, and the north wind, whichever way it blows, is a good way to choose your strike.
Yeah. So I think that there's a lot of fallacies involved here. And as far as outright, and I, what Mark and I mean by outright is I'm just buying a call or I'm just buying a put, right? As far as that goes, you have to consider how much movement you're expecting, right? With any proper options forecast, you need direction, degree of direction, time you think it'll take, and an estimated change in volatility. And sometimes we don't always think super clearly about, those middle two, like how big the move will be over what period of time. And so, just to really jump right into it and not have too much fluff in the beginning here, here's the way I look at it. So if you're looking for a really, really big, huge pop in a short period of time, if it's in a short period of time, you can go with the at the money option that has, a healthy, close to 50 delta. It's got a lot of gamma, so that delta is going to grow fast immediately. And if it's a short period of time, you're not going to be that worried about theta or anything like that. If you're looking for, the potential for a more massive pop than that, but you don't know exactly when it's going to happen, and maybe you have a lower degree of confidence, we go with an out of the money option. And, when you have very, very little confidence, but you want to try and participate if this thing happens, you go super out of the money, and we just refer to that as a lottery ticket because they end up being really cheap options that can go from, a nickel or a dime to dollars. And, you would count on losing more than winning there, but one win can make up for a slew of losers. Now, when we're looking for like more of a slow trend higher, we always want to go more in the money because we want the call option to sort of more replicate stock, right? We want to start it out with a really big delta. We want to start it out with a small theta. And, and we want to give it time for it to play out. It's going to start out with a small theta, and because it's already in the money, the stock would be, if it goes your way, the stock would be moving further from the price. So theta never really becomes that much of an issue. And, like that's one of the things too, is a lot of folks, when we're thinking about directional trades, we stop thinking about theta and such. But all the Greeks sort of interact in harmony, and that ultimately ends up how we get more strategic and how we optimize our strikes is by taking into account a complete holistic forecast of what we think is going to happen and what Greeks best capitalized on that scenario.
Now, riddle me this, sir. People are going to ask out there listening to this. You mentioned your expected move. You're talking mostly from the long premium side. Let's say I'm going to the dark side now. A lot of people listening to this show, they're coming at it. They're looking dark side. They want to harvest all the risk premium that they can. So, Dan, in that scenario, does that influence your strike selection methodology at all? At that point, are you going more strictly tarot and a little bit less of the divine wind?
So we're talking about like naked puts here. Is that where we're going?
Naked puts, naked calls, pick your poison.
Yeah. So that would be an altogether different scenario. And I would use similar criteria to what we'll talk about in the next show with our spreads. But if we're trading, and I think there's a big distinction between naked puts and cash secured puts, and naked calls. And, well, I guess the protected naked call would just be a call credit spread. Covered call would be a very different scenario. So let's start out with the naked version of that. With the naked put, you typically want to skate. You typically want to not get assigned. So what helps you to not get assigned? Is it delta? Well, delta kind of plays into that a smidge, right? We use the delta as a proxy for the likelihood of an option expiring in the money. Now, anybody who's ever read a basic level options book, that that's not actually mathematically true, but, we still use that as a sort of very, very loose rule of thumb. But the problem with using that is that the further out of the money, the smaller the delta. So you would just go further out of the money. But the further out of the money, the less premium you take in. And so, this is a common theme that we've talked about on this show all the time, and I talk about with our student traders at Market Taker all the time. There's the trade-off's not between risk and reward. It's that risk-reward ratio versus the likelihood of success. And the one thing that we know about stock prices is that the initial Black-Scholes model kind of had it a little bit wrong. They assumed that stock prices are log normally distributed, and that we could draw a log normal distribution curve and stock prices adhere to that. But what was wrong with that is that it turns out that the shape of that curve is not right. It has leptokurtosis. That's the longest word that I know.
Yes, you do have bad breath, Dan. I agree.
Yes. But basically what that means is very unlikely events happen much more than they're supposed to. And so that means that the shape of that curve actually has what we would call fat tails. And so the far, far, far out of the money options that have these tiny deltas that imply that they're very unlikely to happen. They are very unlikely to happen, but they still happen more likely than logic or regular math tells you they should. And so that ends up being a real huge detriment for people who use delta to set strike selection for naked puts or calls for that matter. Now, cash secured puts, oh my goodness, this is just like a massive brain dump of information. Here, let's give the folks a break, Mark, before I go on to my cash secured put example. What are your thoughts on what I just said?
For the basic trend of, looking at long premium with the expected move you want, that's going to really dictate where you're going on the strike curve. And I pretty much agree with everything you said. If you're looking for a bit of a banger move, you want a little bit more meat on the bone. You want a little bit meatier delta. So you're going to go a little bit in the money. And then, of course, let that dice kind of roll as the underlying goes. And again, kind of why we're doing the show like this. At the end of the day, Mr. P, I think we could probably do multiple shows on strike price selection. In fact, we are. We have one coming up because the game does change when you're talking about spreads, listeners. Now you're talking about moving to your short strike. So where do you want to set up that short strike? And there's a lot of nuances and machinations therein. But don't worry, we'll get to that coming up on the next episode. But before we get there, Mr. Dan, any other salient points you want to leave our listeners with before we tackle a couple of their questions this week?
Yeah, well, let me just throw out something on cash secured puts then. So cash secured puts, I look at as just very, very different from naked puts. Like naked puts are sort of like just shot taking, hey, I think we're not going to go below this point. But cash secured puts, if done properly, are more, they're a strategic way to, they're a strategic technique to add to your long-term investment style. And so a lot of my cash secured put trades are ones where, I don't just say, oh, yeah, I'm okay getting assigned. Like I literally want to get assigned. And so for there, what I do is I look at where would I like to buy this stock? And a lot of times that does have to do with the support level. Definitely not delta. I mean, that's not relevant at all to that. And so if I know where I would be happy owning the shares of stock, maybe knowing full well that I might roll it into the recycle trade where we then sell a call against that assigned put that turned into stock. I can be really, really strategic about my long-term investing, sometimes trading in and out of the stock, scalping it, and the times where I'm not taking assignment on it, then just keeping the premium. So, okay, now I think we can maybe move on to questions.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments. Remember, if you have questions about strike selection, you want to go deeper into any nuances therein, hit us up, let us know. We will be getting into strike selection on spreads next week for all you on-demand listeners, right away after this for all of you pro folks out there. But before we get there, let's pay off some of your questions, some of your thoughts on some of the salient topics of the day. Right now, Dan, I know you sling a little bit of the old crypto options. I've been at some of your masterminds. I've seen Bitto up there on the screen, sir. You can't lie to me. You can't hide it from me. But we have a question along those lines this week. It's been kind of topsy-turvy out there in the crypto markets of late. We saw the SEC coming at folks recently. Then, of course, we saw the announcement of the somewhat resolution of the XRP saga. And then SEC coming back out again. So crypto have been kind of all over the place over the last couple of weeks. They're up, they're down. And so it's an interesting time to revisit this topic, which is, quite frankly, there are many ways for options traders to get crypto exposure in their securities accounts. Mara, Riot, Coinbase, Bitto are all popular choices, but what is your weapon of choice for crypto options exposure? And again, if you don't see your favorite, just hit us up, reply a DM with your suggestions. We have some of those. But right now, Dan, this is an interesting poll right now. I will say this. We gave our audience 4 choices, Dan. They can choose from Bitto, for Riot, of course, Riot Blockchain, Coin, which is, of course, Coinbase, and Mara, which is, of course, Marathon Digital Holdings. Those last 3 really hot during the go-go meme stock period of 2021. Cooled off a little bit. Then, of course, Coinbase has been rocking and rolling over the last month and change due to all the aforementioned SEC noise going on right now. So, Dan, first off, if you have a preferred vector for how you like to get your crypto options exposure in a securities account, we're not talking about going out and trading the futures or the options on CME or buying spot on a venue like that. We're talking about crypto options exposure in your securities account. What is your preferred vector? And then B, more importantly, what do you think our audience is going for, sir?
Well, let me work backwards on that one, Mark. I mean, I've shared my thoughts on this a fair amount on this show. And I don't know, like, I feel like there's a couple of things that I talked about crypto options that are pretty important sort of warnings, you know. And so I'm hoping that some of that resonated with our folks. But I also know that some of these things were very, very popular to trade. Like, for example, you know, Riot, Coin, Mara. You know, we've seen pretty good volumes in them intermittently. But what I'm hoping people lean towards is what I lean towards, and it's Bitto, because Bitto is exchange listed. I mean, I guess all these are exchange listed, but you know, they all sort of represent different things. Bitto is Bitcoin. It is, you're investing in a crypto with all the caveats of, you know, futures-based ETFs. You know, there's that caveat. But like Riot, Coin, Marathon, like these are companies. And they're companies that are heavily involved in crypto, and their value is somewhat tied to crypto, but their value is tied to a lot of other things too. And, you know, Coinbase, or, you know, I mean, Coinbase, who, you know, I don't know. I'm not starting rumors or anything because I have no idea. But, you know, maybe what if they have really poor management and as a company they make bad decisions? Well, that would be something independent of the price of cryptocurrency. Riot and Marathon are last I looked, they're involved in mining and such, right? And so, you know, that's very tied to the price of crypto too, but, you know, there's energy costs that factor into that, which they end up being the dog in the tail wagging the dog situation if energy prices make it too expensive to mine for crypto. So I don't know, there's a lot going on. The most pure way to trade crypto options is Bitto. So yeah, that's the one I'm going with.
Yeah, I can't really argue with that. That was kind of my thought process as well. When we posted this, I kind of thought it was going to be a runaway, Mr. Dan. I thought Bitto was going to just dominate the tape here. And right now, Mr. Dan, by the way, my vote would be Bitto as well for all the reasons you just laid out. It's the direct tracking vehicle. You don't have any of this other nonsense baked in. But right now, Dan, 35.3% of our people choosing Marathon Digital. Interesting. I did not expect that. 29.4% right behind it, Coinbase. I could maybe see that. It's a broad-based name and also getting a little bit of action recently, so maybe some recency bias there. Riot, 19.6% for number 3. And then it just ticked again. People keep voting. Stop voting. I'm just kidding. All right, so now the updated numbers, listeners. 34%. Mara still in the lead, but Coinbase getting closer, 30.2%. Riot, 18.9%. And it looks like people are listening, Dan. They just got a couple of votes ticking in for Bitto. Now it's up to 17%. But it's still in fourth place. Bitto, can you believe that?
Yeah, I mean, it's weird, you know. I mean, I guess it's how you interpret the question, you know, because investing in crypto, I mean, those other things that are higher on the list, those are investing in the crypto space. I would say not really directly investing in crypto. You know, sort of the difference between like an oil company and an oil services company, you know. So, yeah, I don't know. It's interesting.
Now, speaking of interesting, Dan, we had a listener point out Blue Lobster saying owning calls on Bitto for over a month is a seriously bad idea. It's been paying a huge dividend lately. You can scalp for a week or two, but be aware. And you know what? He brings up an excellent point. I just pulled it up, Dan, to see exactly. And they have it right now. The dividend yield, Bitto is trading 15.60 right now, listeners. The dividend yield 14.25%, and they so far have paid out an annual dividend of $2.22, Dan. It's paying roughly monthly right now. The last one they paid was July 3rd, 66 cents, 42 cents on June 1st, 41 cents on May 1st, 46 cents on April 3rd. This is a very, very steady dividend flow here. Kind of changes my tune a little bit, Dan, about just selling. Certainly on the call side, I was never a big buy, call, and hold fan in Bitto anyway. But it does maybe bias you a little bit more towards the underlying. If you're going to miss out on some of the dividends, that may change the equation. Does that change the equation for you, Dan?
Yeah, I honestly, I hadn't looked at Bitto in a fair amount of time, and honestly, I didn't realize that. That's something to take a good hard look at right there.
Yeah, that changes the equation a little bit. I love our listeners and our Twitter followers over there at Options. Blue Lobster, great point. We love you folks out there. Always bring in the salient details to us here on the show. But that does change the game, obviously. And a lot of people have been out there doing a lot of secured rights in Bitto. It's a very popular strategy. The vol out there, a little bit cheap right now, so maybe not quite as sexy right now as it was. That could be another argument. If you can capture these juicy monthly dividends, could be another argument. I know we like to talk the options here, listeners. But hey, we're not averse to holding a little underlying, especially if it's paying you 14.25% per year to hold it. Intriguing stuff. That's why we talk about it here on the show. All right, Mr. Dan, that's going to do it for part one of our epic doubleheader. All of our pro folks out there, stay tuned. We'll be back in a little bit with episode 2. For all you on-demand folks, it'll be coming at you next week. We are going to get into more strike selection details there, particularly on the spreads where things can get pretty funky. Of course, if you want to check out the pro, you want to join us for the live, only one place to go, theoptionsinsider.com/pro is the place to go. And before we go, Mr. P, if folks have questions about crypto options or the juicy dividends lurking therein, or they want to go deeper on strike selection, where should they go? What should they do?
Yep, glad to help. MarketTaker.com, 2 T's in a row. And glad to help any way we can. You can message me there. You can join our chat room and message me there. And I or one of our other coaches will reply back to you.
Check them out, MarketTaker.com. Otherwise, we'll be back for all you pro listeners instantaneously in your ear holes. And the rest of you next week, another episode of Options Bootcamp. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.